Have you ever wondered if your beloved dog or cat could actually help reduce your tax bill? What if I told you that your furry friend might be worth thousands of dollars in tax deductions that most pet owners never even know exist? Today we're diving into the surprising world of pet-related tax deductions that could put real money back in your pocket. I'm about to reveal 10 legitimate ways your pets can become unexpected tax advantages, and some of these will absolutely blow your mind. From service animals to business mascots, from medical expenses to moving costs, the tax code has some fascinating provisions that pet owners can legally take advantage of. But here's the catch. Most people leave thousands of dollars on the table every year simply because they don't know these deductions exist. Let's start with the most obvious but often overlooked deduction: service animals. If you have a legitimate service animal, not just an emotional support pet, but a trained service animal that performs specific tasks related to a disability, you can deduct their care expenses as medical deductions. This includes food, veterinary bills, training costs, and even specialized equipment. The key word here is legitimate service animal, which means dogs trained to perform specific work or tasks for individuals with disabilities. But here's where it gets interesting. Guide dogs for the blind are the most well-known, but service animals can also include seizure alert dogs, diabetic alert dogs, and even psychiatric service dogs that perform specific trained tasks. The training alone for these animals can cost $15,000 to $20,000, and that's potentially deductible as a medical expense if it exceeds the standard threshold. Now let's talk about emotional support animals, because this is where many people get confused. Emotional support animals don't qualify for the same deductions as service animals under current tax law. However, if your doctor prescribes an emotional support animal as part of your treatment for a diagnosed mental health condition, some of the related expenses might qualify as medical deductions. The prescription and documentation become crucial here. Moving on to business deductions, and this is where things get really interesting. If your pet appears in your business marketing materials, social media content, or serves as a legitimate business mascot, you might be able to deduct some of their expenses as business costs. This includes professional photography sessions, grooming for business appearances, and even food costs if the pet is regularly featured in your business operations. I know what you're thinking. Can you really deduct your Instagram famous cat as a business expense? The answer is maybe, but it depends on proving legitimate business purpose. If your pet generates income through social media sponsorships, merchandise sales, or appearance fees, then yes, their care becomes a business expense. The IRS looks for profit motive in legitimate business activity. Here's a deduction that surprises almost everyone: moving expenses for pets. While the Tax Cuts and Jobs Act eliminated moving expense deductions for most people, military members can still deduct the cost of moving their pets when they receive permanent change of station orders. This includes transportation costs, temporary boarding fees, and even quarantine expenses for international moves. Let's dive into the world of breeding and showing animals. If you breed pets or show them competitively, this can qualify as a business activity with significant tax implications. Stud fees, show entry costs, travel expenses to competitions, specialized training, premium food, and veterinary care all become potential business deductions. The key is demonstrating that you're engaged in this activity with the intent to make a profit, not just as a hobby. The IRS uses a presumption rule. If you show a profit in 3 out of 5 consecutive years, they presume you're engaged in a for-profit activity. Even if you don't meet this test, you can still claim business status if you can demonstrate business-like operations and profit intent. Now here's a deduction that very few people know about: theft and casualty losses involving pets. If your pet is stolen or injured due to someone else's negligence, and you incur unreimbursed expenses, these might qualify as casualty loss deductions. This is particularly relevant for valuable breeding animals or show pets. Let's talk about the home office deduction and how pets factor in. If you use part of your home exclusively for pet-related business activities, breeding, grooming, training, or boarding, you might qualify for home office deductions. This includes a portion of your utilities, insurance, repairs, and depreciation. The space must be used regularly and exclusively for business purposes. Here's where it gets creative. Pet therapy and animal-assisted therapy present unique deduction opportunities. If you and your pet provide legitimate therapy services to hospitals, nursing homes, or rehabilitation facilities, the expenses associated with training, certification, transportation, and care become business deductions. Some therapy animals require special insurance, ongoing training, and health certifications, all potentially deductible. Charitable deductions represent another interesting angle. If you foster animals for qualified charitable organizations, you can deduct unreimbursed expenses, including food, supplies, and veterinary care. The key is working with a qualified 501c3 organization and keeping detailed records. Some foster families spend hundreds of dollars monthly on supplies and care that become legitimate charitable deductions. Guard dogs and security animals used to protect business property create another deduction category. If you own a business and use dogs for legitimate security purposes, their care and training costs become business expenses. This applies to farms using livestock guardian dogs, construction sites with security dogs, or retail establishments with protection animals. Now let's address some important limitations and requirements. First, the IRS scrutinizes pet-related deductions carefully because of past abuse. You need excellent documentation, including receipts, veterinary records, training certificates, and proof of business purpose where applicable. Second, hobby loss rules can limit deductions if the IRS determines your pet activities lack profit motive. The miscellaneous itemized deduction changes under recent tax law also affect some pet deductions. Many expenses that previously qualified as miscellaneous itemized deductions, subject to the 2% floor, are no longer deductible through 2025. Here's what you need to do to maximize these deductions legally and safely. First, maintain meticulous records. Every receipt, every veterinary bill, every training certificate should be documented and organized. Second, establish clear business purpose where claiming business deductions. Casual pet ownership doesn't create business deductions, but legitimate business activities do. Third, consult with a tax professional familiar with these specialized deductions. The rules are complex and fact-specific, and what works for one situation might not apply to another. Fourth, never exaggerate or fabricate business purposes. The IRS has seen every scheme, and honest mistakes are treated much more favorably than intentional fraud. Remember, these deductions must serve legitimate purposes beyond just wanting to reduce your tax bill. The IRS looks for genuine business activities, medical necessities, or charitable purposes. Your adorable puppy might bring you joy, but that alone doesn't create tax deductions. Before we wrap up, let me emphasize that tax law changes frequently, and these deductions might not apply to everyone's situation. What matters most is understanding these possibilities exist and working with qualified professionals to determine what applies to your specific circumstances. The world of pet-related tax deductions is far more complex and opportunity-rich than most people realize. From service animals to business mascots, from breeding operations to charitable fostering, legitimate deductions exist for those who understand the rules and maintain proper documentation. Your pets might not be able to file their own tax returns, but they certainly can help reduce yours when the circumstances are right and the deductions are legitimate.